Welcome and good morning to this Trade Along Live session with Saul, focused on the S&P 500 E-mini. You can find us at tradealonglive.com, tradealonglive.com. We are here daily, slugging it out in the S&P 500 E-mini, looking to do 2, 3, 4, 5 trades. Saul's going to be joining us shortly. Right now it's 9:26 a.m. on January 5th, 2022. Everything we do is for educational purposes only. Nothing is to be taken as direct trading advice. We have guests coming in today. Welcome guests. We have current subscribers. I just sent out a link or a series of links for a monthly discount and also a quarterly discount in the opportunity to sign up for the service. Saves you a wee bit of money, and it's always a good idea to sign up when those things pop up. They're very rare, so take advantage of it. Put up an S&P 500 E-mini chart. Strap yourself in. Saul's going to be joining us shortly. He's going to pick up the mic. I'm going to go through the morning session with him. We're here from 9 a.m. to 12 noon with the action of price action trading. Saul's proprietary scalping levels. His guidance during this session from an educational point of view goes on from 9:30, which is coming up, to about 11:30. We like to be finished. In other words, we like to have banked our money early based on our trading, so we could be done earlier. Saul's going to give out his proprietary scalping levels. He's going to give out a pivot and other levels on top and bottom of that pivot. These become Saul's levels for this morning's trade. He's going to give them out to you, a pivot, specific levels on top and bottom of that pivot that he calls levels and zones. You'll work the market with Saul during the morning session against those levels and zones. If you're interested in learning how to trade, go to tradealongtradingacademy.com, tradealongtradingacademy.com, and review the offerings and decide how you want to move forward based on your own trading. Trading is not for the faint of heart. Trading is a contact sport. You can lose money, make money. You got to know what you're doing. You got to have skill, in my humble opinion. And we're here to help you develop and add that skill to what you're doing. We're here every day. You can be here every day, but you need to subscribe. So what I mentioned earlier, which I think is interesting, is if you don't make your money today for the entire month payment for this subscription service, then ask, and we can help you in the academy. All right, so I'll be in the background. Sal's going to be joining us. You have a great trading day, and again, it's up to you on what you do. Take action, sign up, not sign up. You just don't have to stay here. Of course, we want you to. And I think you'll benefit from being here, but you got to take action on your end.
Good morning, everyone. Can everybody hear me all right? All right, let's give you our levels for this morning. Our pivot this morning is 47.81, 47.81. Resistance above at 89.97, 48.06. 15 and 24, support below at 74, 67, 58, 50, and 41. Pivot 81, support 74, 67, 58, 50, 41. Resistance on the upside at 89, 97, 06. 15 and 24. All right, market kind of sold off a little bit yesterday afternoon, and basically is coming back in the range that we've been at for the last, I'd say, week or so. Kind of consolidating up here, trying to decide which way it wants to go. Basically, is what it's trying to do here. Obviously, these are all-time highs, so it's absorbing this level, trying to figure out if there's more room for advancement, or are we going to just kind of hang here for a little bit or see where we go next? Really, that's basically about it. So we shall see what happens. But we are here to trade mini S&Ps. We are looking for opportunities to scalp the market based on the price action and the levels that we gave out. Combination of both price action and levels give us opportunities to trade. We focus on the morning hours to give us our better opportunities, but it doesn't mean that the later afternoon doesn't work. It's just that we focus more on the morning hours, as we believe the volatility, the number of players, the ebbs and flows that is created during the morning hours fit our methodology better than it does in the afternoon. So morning hours it is for us, and we also try to maybe fit in about, on average, about 4 to 5 trades during the course of the morning hours as we quickly come down here to our 74 area. So that's what we're looking for. We're looking for opportunities to scalp the market based on the levels and price action. Once the market paints some bars, the combination of both gives us opportunities to trade. All right, we drifted quickly down here. Of course, we get down to 75 and rotate back up. For those of you who have been scaling in, you probably got in there at 75 and a nice quick rotation there off of the 75. For those of you who are just joining us, so we have a level, but then we have to scale around it. So, not everybody scales the same way, as you can imagine. Some scale in tighter, some scale in a little wider. It all depends on your risk tolerance and what you are looking for as far as risk is concerned. As we come down here to 74 now, and then rotate up very nicely for us. So hopefully we're able to get in on either 75 and or 74, somewhere along the line there, take advantage of this level. And then again, we're looking to take advantage of ebbs and flows of the market and against the levels. So there's the 74, as you can see in the chat box area there. That's the first level that we have as support. And it's bouncing off of it very nicely here for you. All right, if anybody has any questions, feel free to ask in the chat box area. We do like questions. I don't mind whatsoever. I'm looking for, if you want a reason to explain what we do here, how we do things. The methodology that we have is obviously a taught experience. So we are been doing this for a while, and we feel that if you are looking to trade, if something new to you, or if you've had trading experience before, you want to expand your opportunities there with different kinds of setups that maybe you haven't seen before. That's another reason why you should jump in. But it is what it is. We're here every day. We used to be on the Florida Exchange. Unfortunately, the exchange is no more because of COVID. Thanks, COVID. Well, they were talking about lessening, trying to close the exchange, the floor for a while, and COVID just kind of gave them the reason to go ahead with it. So unfortunately, they took it. Any reason for them to close it? Well, it wasn't initially done that way, but it was at the end of the day, it was done that way. So that's unfortunate, but we are where we're at. We're in the new world right now. We're unfortunately in a new world, and we have to deal with it. Next level of support we have down here is the 67 area. See what we want to do down here with that. And we had a nice rotation against our 74 area. And can't complain about that little opportunity there. And now we're just kind of continuing to a little bit of downtick here. If you were a little aggressive, maybe you took the pivot settlement price off the initial rotation off the morning. Could have been one way or the other. I don't know. That would have been a quick call there. If you did, you had to have the order in, obviously, because it just jumped up there for a quick second and rotated off. But if you did take it, nice trade. And now we're just kind of bouncing around here a little bit. So 67, next area of support do we have on the downside? Let's see. As far as any numbers this morning are concerned, I think the minutes from the FOMC are going to be released at 1 o'clock Chicago time. So that could move the market, but hopefully you'll be done by then. 1 o'clock Chicago time, the minutes will be released, and the focus on the minutes is going to be the conversation they've had at the meeting in regards to the speed of interest rate hikes that they are considering. That's going to be a consideration for the market, at least what they're going to be focused in on. 8:45 in about 8 minutes, we have a number coming out, the PMI composite number. This is going to be in the regards to we have an ADP number that came out this morning, which means that Friday is going to be what is Friday? Friday is going to be unemployment. That's right. So we have unemployment coming out on Friday, which is in 2 days. So the ADP came out already, and that really didn't move the market that much. And then we have basically another number coming out here in about 7 minutes, so be mindful of that. And then we'll see what happens with the FOMC minutes that'll be released at 1 o'clock again. Hopefully you are out of here. We don't like F days. Any kind of F for Fed kind of hinder us as far as making money is concerned because of volatility. I just don't like the volatility. That's all. I've traded many a F day, I want you to know, and I did not like any of them. I just did not like any of them. It's really that simple. But it is what it is. All right, so let's see here. What's happening in Vegas stays in Vegas, except for CES. The CES show, hopefully the world's biggest tech expo, known as the Consumer Electronics Show, is making a comeback this year after going virtual in 21 due to the pandemic. Exhibitors are optimistic the technology displayed at the event will spread into the broader market. And with thousands of attendees hunting for innovations of the future, there's a good chance that it will. With some companies like Amazon and Intel and Facebook have canceled in the in-person appearances because of the rapidly spreading Omicron variant. There will still be plenty of tech on display, except to see the latest advancement in robotics, self-driving vehicles, space, artificial intelligence, digital health, 5G, and what's up at Facebook, up to 75,000 attendees. Whoa, that's a problem. 75,000 attendees will be there, with 2,200 exhibitors are expected to arrive for this year's conference, which will take place January 5th, this weekend, basically, 5th through the 8th. Wow, that's a lot of people there. That used to be, that sold out Vegas all the time. It's always hard to get obviously, with so many people there, but it's a great show. Has always been. It's where they first introduced flat screen TVs, and now everybody has one. So we'll see. And then they introduced the 80-inch one. Now they're out in the stores, so they're going to be coming out. And if there's going to be something in the future, it'll be there. Maybe the cars, right? We'll see. So we have this number coming out here in about 5 minutes. we'll see what happens with that number. Again, we don't like to trade numbers, so we do like to let the number be released, and it could make the market move. It could not. Usually what happens is that you have a position on, and it's usually wrong. So I've traded from experience, unfortunately. All right, now we rotate all the way back up here to our pivot area, and 84 and a quarter is the settlement price, but we already touched that initially. You never know what it might do this time. But the upside resistance is up at 89. See what happens up there. Basically, we're range bound, right? I mean, if you look at the last, we had a little bit of a break a couple of days. Well, that's what I say that. A little bit of a break a couple of days ago, but basically, it's come back, made new highs yesterday, sold off a little bit. Basically, if you look at the bigger picture, it's just consolidating just a bit. That's all it's doing. The settlement price area worked. If you were a little aggressive there, I would not take it again if it comes back up there. Just FYI, it's the second time there already. So be a little bit careful if you're going to do it the third time. Doesn't bode well the third time. Doesn't bode well the second time sometimes. But hey, it worked this time if you did it, if you were a little aggressive. All right, come down here again. Next downside support right now would be at 67. That's our next support level. We have this number that just came out. No, it's coming out in about 2 minutes. So maybe a little bit of nervousness here prior to the number. So we'll see what that will. So that number is going to be out, released here in about a couple minutes. So we'll see what it wants to do as the market is kind of selling off rather quickly. Off those interim, well, they didn't make no highs. That was just around the settlement price and rotated off. All right. All right, so now we're just kind of hanging here. 67 on the downside, next support level. Resistance on the upside would be 89. And let's let this number come out, let it do its thing, and we'll see where we go from there. And if anybody has any questions, feel free to ask. If for those of you who come in a little bit late, if you bring up the chat box, you will find the levels that we gave out this morning, and they use those as a guide for the day. We can add to them, subtract from them. We can tweak them a little bit. What isn't boding well for the market these days? Whatever report comes out, right? Doesn't really matter. Everything that comes out these days is doing well for the market. I mean, we're all pushing all-time highs, so can't be too bad. I think they'll be looking at the FOMC this afternoon to see what they're going to say as far as their timetable for interest rate hikes. That's going to be what they're going to be focused in on. So let's see what happens. And then, of course, unemployment on Friday. Always something that the market anticipates anxiously. Used to be fun to trade. It's not so much fun to trade anymore. They just don't make the same kind of movement that they used to there on unemployment day. But you never know, right? You just never know. And that's why we're here every day, trying to take advantage of ebbs and flows of the market and trying to be patient, wait for opportunities to present themselves. We've had one nice trade this morning against our first level of support there at 74. And now we're just kind of treading water here, going back and forth on a little bit of a range. See what it wants to do or not. All right. The global chip shortage is impacting car makers differently, causing uneven effects down the supply chain. The latest, after 90 years as being the top selling automaker in America, General Motors, um, has lost its sales crown to Japan's Toyota, which also has become the first non-domestic automaker to take the top spot. Newly released figures showed that U.S. sales for Toyota jumped 10% last year to 2.3 million vehicles compared to 2.2 vehicles sold by GM, whose sales were down 13% for 21. Ford will report 21 sales results later on this afternoon. The modern car can have hundreds, if not thousands, of computer chips. With the growing semiconductor shortage, Toyota began stockpiling silicone ahead of its rivals. It is also earlier to bet on a recovery in U.S. car market, cutting parts and production orders less sharply than its competitors to make it better prepared for the return of demand. While Toyota executives are successfully navigating many supply chain problems, they don't expect that their newfound sales title to lead to a permanent shift. Lofty car prices are expected to persist amid bare dealership lots and inventory crunch, but those who are able to deliver are poised for outsized gains. So, yeah. Can we repeat the levels in the chat again for us? And those of you who are those are looking for our levels, there they are in the chat. If you look at the chat box, you'll find the levels that we have gave out that we use for the day. No, we would not. It'd be very risky to take the 74 again. It worked once and twice even, I would say. So not really a good, I'm not a proponent of taking it the third time around. But again, it all depends on risk tolerance, right? So if you like the action, you're in. You can keep a tight stop though. So everybody trades differently. Not everybody trades the same. So I'm not telling you not to take. I'm just saying it's a lot more riskier third time around on the 74 area than it was first or second. The yield on the 10-year bonds is at 165. So now we're going to keep us outside eye on that to see what happens there with the bond market and possibility of interest rates hikes. Now we talked about that dynamic, and the pretty much the dynamic was simply because of the fact that they've been talking about raising rates, and they just never did. Or the bond market never reacted to them saying that they're going to be raising rates, except until after the new year. So, we can say we understand why the market did what they did. Now we understand why, but why the timing is the question. Why did they wait till after New Year's? We'll see if it means anything or not. But just as an aside, just keep the bond market in play here a little bit for us. Well, not that we're trading it, only because we don't like to trade. Well, the bond market used to be a great place to trade. Let's put it that way. I mean, I used to trade on the bond floor, bond pit, and we could trade. Unfortunately, this is just not a good. Used to trade well technically, not anymore, unfortunately. But it is what it is. So we found the S&Ps that trade well technically, and we like S&Ps that trade well technically. So we trade S&Ps. That's all. So we're back up here to, that's amazing. We're just jumping around, right? It's just all over the place. My level on the upside resistance is up at 89. Coming back up here to our pivot area, kind of neutral right here with the pivot, so not really too excited about much. Again, if anybody has any questions, feel free to ask in the chat. Just type in your questions. I'll be able to see it and answer it for you. Especially when we get in range like this and nothing much is happening. Much easier if you ask me questions than just me talking for no reason. Should go short or long at the pivot. Well, I mean, it all depends on how it comes, where the market comes from. If you're coming off of, well, obviously not every time it's the same thing, but the fact that we're flatlining like this kind of makes it very difficult to give one decision or the other. If we were extending a little bit and the market was moving around a little bit and we rotate back to the pivot, the first initial rotation back to that pivot would be to fade it, but that's only if we're having some kind of movement and the market is not trading on both sides of it like it is right now. So that is so there's not really, there's sometimes you tell yes and sometimes no. It all depends on the price action, which is what that's most of the situation in the market. You have to look at the price action. It will help you dictate whether you want to fade it or go with it. So there's always you always have to look at what's going on in the market prior to it comes back. You can't always say the same thing every time. All right, we are range bound here, as you could tell, bouncing off of, well, almost getting up to settlement price there, right around their pivot area. If you are aggressive, maybe you took that first rotation to it. Well, hi there, Isha. We are looking for opportunities to trade based on the levels we gave out. The pivot is like an area where we're pretty much neutral. So it depends on how aggressive you want it to be or not. I would say we're neutral right now when it comes back up here to the pivot. And it's basically trading both sides of it. So whether you go long or short it all depends on a certain situation initially. Right now, at this moment right now, I would be doing nothing around the pivot, just kind of watching. The first level of resistance we have is up at 89. I would probably look to resistance areas where you want to maybe think the market might stop and rotate it off. So it's just like the support level on the downside we had down at 74 was a buying opportunity for us. And if you did buy them down there, you had a nice rotation to make a little bit of money off of that. So we're trying to find areas in the market where we think we can get long or short and take advantage of the ebbs and flows, because we don't believe the markets go straight up or straight down. We're also trying to get 2 to 3 points on our trades. When the volatility is at this level right now, sometimes it gets a little bit more crazier. So we have to expand our risk tolerance, maybe to 4 or 5 points, and even more depending on volatility. So those are the options that we have. And all those options are also dependent on your risk tolerance as a trader, what you're looking for, what your goals are, which trades you can visually see or find based on the work that we do. As far as the education course that we have, we show you why these levels, how to find them, and then why they would work. And then you have to decide whether you can find those levels on your, the goal of our course is to find those levels on your own. And then once you find them, to execute the trades according to what we think will happen. So the recognition of the trade and the execution of the trade are 2 different aspects. So recognition is one aspect that we show you how to find them, and then the execution part is basically the hard part, because you have to find a way how you get into them, how many contacts you trade, how are you going to be able to maximize your profit potential based on your risk tolerance, because not everybody trades the same. Some trades that I would take, you wouldn't take, and vice versa. So you have to be comfortable in the trades that you are that you recognize and then take advantage of, independent of anybody else. So that's what we do here on an everyday basis. And if you look at the chat right there, those are the numbers that we gave out at the beginning of the day, and we'll use those as a guide to the day. So it all depends on your risk tolerance and what your goals are, and how much you want to trade on any given day. We try to keep it to about 4 or 5 trades a day, and we focus more on the morning hours to give us those opportunities. And sometimes we get 4 or 5 trades, other times we don't. So it's a matter of being patient and waiting, I say on average, we average about 4 or 5 trades a day. And again, most of it is based on volatility. Sometimes we're going to get more market movements and more opportunities, and other times, like today, we're just going to go back and forth, going nowhere fast. So next support level on the downside we have is down at 67, because we already tested the 74 a couple times and they worked very nicely. All right, we are back here at our pivot. Very, very quiet kind of day. Like I said, over the last week or so, market seems to be consolidating here a little bit and trying to see where the next move is going to happen. Patience is very important, and waiting for the opportunities instead of just, trying to guess which way the market is going to go off of this little range we're in. So instead of trying to do that, we'll just wait for a good opportunity. It's very hard to find some when the markets trade sideways like that, but patience is what we're here to do, and you have to be patient, because you'd be guessing here right now if you'd be telling me it's going to go up or it's going to go down. Yeah. I think my emotions would move the market. Yeah, that's not happening. It really is amazing sometimes why markets all of a sudden get energy from within itself and start making a move. We could be like this for an hour, 2 hours, right? And then all of a sudden, you know, it just gets some energy from nowhere and makes this move. And you're like, well, sometimes it's obvious, there's a number released or something that could make the market move. But now, anything could make the market move. And we are going to be, as a trader, you're going to be the last person to really find out why the market's moving. Because it's just they're not going to tell us. Some geopolitical situation, or somebody says something, or some person injects his opinion on the markets, who people in the market listen to. At least initially, you get that move, but it never ceases to amaze me how sometimes we're just dead in the water and nothing happening, and then all of a sudden some crazy volatility is injected into it. And that's why we keep our stops in, because you never know when those situations are going to happen. But the other thing you have to remember is just to, when it's like this, just you can't force it, can't have your emotions in play, can't scream at it, can't yell at it. Just let it be and wait for something to happen. Well, I mean, the Chicago schools have voted to close down, but the reality of it is that it's just bad timing. I mean, I'm affiliated with a private school, and they are supposedly coming back to school, but they had to wait for all the tests to come back from all the kids, and because there's such a backlog in the waiting for testing results, they're starting virtually versus uh, going to school and having all the kids get tested there. Now, there's another school that I am affiliated with that all the kids came back to school. They all got tested. They had rapid tests or something, and they found out that 20% of the kids who were at school could tested positive. Instead of testing them before they came to school and exposing the other kids to the virus, whatever this exposure thing is right now, right? So the I don't blame the teachers union for wanting to make sure that the kids don't have it, because I mean you have one school that's actually did the right thing and are waiting for the results before they open and they're going virtual, and the other one started the school and then they take the test of all the kids while they're there, and they're 20% of them are are tested positive. So it's crazy. Where do you put your stops? Well, again, it depends on how slow things are, Phil, and what things are, what your goals are. I mean, again, I'm looking 2 3 points, and when it's like this, that's all I'm trying to do. So when it gets a little bit more busier, I'm looking to expand that range, but All right, the ranges, unfortunately, are getting a little tighter each 5-minute bar. So right, resistance level on the upside would be up at the 89. All right, well, we're up here. They, again, like I said, you could go on either way when they pushed off of just sitting in that little range and decided to go up a little bit. And I would say 89, next level resistance. I don't even know if we're going to get up there or not, but we'll see. And whatever the situation is, keep your stops in place. There's that. Should keep our stops in place. Only because. Oh, well, we are coming back here to our pivot, unfortunately. All right, we're trying to push up here a little bit. And lower 89, we have a little bit of resistance. We'll see what happens there. Unfortunately, it's just a slow day. I wish I could tell you any different. It's just not. Just a slow kind of day. All right, I guess the 88 area worked. Again, we seem to be, by now, should be doing like, it's been happening a lot lately. Right? We said we had an 89, it gets down to, it gets up to 88. Hopefully you were able to jump in there. Did the same thing at 74 initially, got down to 75. So we've been doing that a lot lately. Hopefully you've been adjusting, you're scaling in a little bit to accommodate that fact. We're not going to be perfect. You got up here to 88 and a quarter. Maybe you were able to jump in there at 80, 88 and you're beginning of your scale. And maybe you were able to take advantage of that little entry point there. That's happened. That's been happening a lot lately. Hopefully you guys have been adjusting to that a little bit, guys and girls. I've been adjusting to that just a little bit. If you look at the chat box area, we are going to show you the levels that we gave out this morning. There they are. As you can see, our first level of resistance up here is 89. We got right up there to 88 and a quarter. Hopefully some of you scaled in. At the lower end of the scale there would probably be around 88, depending on what your risk tolerances are. And if you have 89, obviously you didn't get it. I would be a little bit careful there on 89 right now. Maybe take the upper end of that entry point. Maybe top end of the range if you're scaling. If you have to make a little bit of an adjustment, since we just, obviously, hopefully you were able to get in at 88. Like I said, I've been a point off lately all the time, but hopefully you've been able to adjust a little bit. Not a point off, that's the area that we're getting. Still in the right area, right? I mean, it can't be perfect. That's what I'm trying to say. All right, nice rotation there against the area that we talked about. Remember, I always say it's an area simply because we're not going to be perfect. All right, I mean, it is what it is. All right, market. Now, if we come back up here to the 89 again, be a little bit careful. Like I said, we didn't get 89, but we got 88, so it's a little bit more tenuous than it was. If you're just trading one lot and you have 89, definitely a lot riskier than it was a second ago. All right, nice little trade there if you did jump in. And if you're trying to stay short, if you have more than one contract, you're trying to take your profits and have a trailing stop on anything else. And like I said, everybody trades a little bit differently. So if you didn't get 89, I get it. That's all right. All right, Philip, you have a good day. All right, come right down here to our blue band, in case maybe you are wondering. And it just rejected. Didn't it reject the high yesterday too? Don't we have the same kind of trade? Rejected the high and came off. Kind of doing the same thing today. But I think it's been doing it has done that. If you look back, it's done that yesterday. Did that on Monday too. But see what it wants to do today. Every day's a new day. You can never get like a. If you think there's a pattern, as soon as you figure out there's a pattern, it just bites you in the butt. Been there. Don't ever try to figure out a pattern. I'm just saying it's been happening lately. Like I've been saying that, we're missing it by a point every time. So hopefully you've made a little bit of an adjustment there. And again, if anybody has any questions, feel free to ask them in the chat box. Well, you enjoy them. What's happening? We are trading mini S&Ps in the futures market, trading equity futures. We are trying to find opportunities to scalp the market. We gave out levels this morning that we focus in on. If you look at the chat box area, there are the levels that we have that we gave out this morning when the market opened up that we use as a guide to the day. Our pivot there was 81, which is where it's trading at right now. It's kind of been a quiet day today. But we did go rotated back up to our minutes ago. And on the downside, we did have some support there at 74, which it did also come off of, and had a nice opportunity to make a little bit of money off of those off of those areas. So our first level of resistance worked very nicely. Also, our first level of support. We're looking to scalp the market. We're trying to find these areas where we believe markets will bounce off of and give us a chance to scalp for about 2 to 3 points on our trades. And we like to average about 4 to 5 trades a day. Average is a key word. We've probably today, depending on how aggressive you are, maybe had 3 trades. But if you just take our levels alone, we've had 2 levels. Our 74 got triggered and our 89 got triggered. And now we're just kind of settling back in here in the middle of the range. So that's what we do here on an everyday basis. We also have an education course that teaches you the areas, how to figure out these levels that we that we give out to you, and also look at the price. And then we're also looking at price action opportunities that occur once the market paints some bars. We show you how to find those. And the objective of our education course is for you to be able to trade independently of myself. But we used to do this floor. We used to do this broadcast, I think, from the floor of the exchange. Where can you find that course? This is what we teach in this venue here. We will get you the link to our website for some information, which we'll bring up in a little bit, and you can just link up it to our to our link. Let me see if I can just give you the well, it's tradingacademy.com. If you look at that website, that'll give you a little bit overview of some of the things we do. tradingacademy.com. All right, the market is definitely floated quickly back to the range it's been at for most of the morning. Again, like I said, we like to average about 4 to 5 trades a day. Obviously, some days we're going to get more. We like to have a profit target of about 2 to 3 points, but again, those profit targets could change based on volatility. Sometimes the market is moving around very fast that we have to expand our stops a little bit, maybe 4 or 5, or even more than that, depending on volatility on any given day. And we make those adjustments according to that day's trading. Sometimes we make the adjustments intraday, and we could start out calmly, and then all of a sudden the market gets an influx of movement and volatility, and we have to expand a little bit. But those are things that we have to do when we can recognize the volatility that's injected into the market. But for the most part, I think probably 80% of the time, we're probably looking more at 2 or 3 points on their rotations. And obviously, if you're trading multiple contracts, you can hold on to some and keep some contracts to take you more than 2 or 3 points on them. So that's what we do here on an everyday basis. All right, we're kind of just hanging around our pivot, kind of very neutral here, not too exciting today. And every day has its own, set of excitement, sometimes more exciting than others, sometimes not so much so, but, it is what it is. We also focus on the morning hours to give us our opportunities to trade. We feel that those morning hours, first couple hours of the morning, with a lot more volume that's infused in those couple hours, gives us a good chance to use our methodology and give us those opportunities to scalp. So as the day goes on, it becomes a little bit slower. Yeah, Diane, it's one of those slow days today. You really didn't miss much, to be honest with you. I mean, obviously, we did have our support level on the downside that got triggered. And we just got the upside resistance got triggered. And so now we're just back into the range. Really haven't really done much today. Just one of those slow days. If we look at the chat box area, we're going to show you the levels again. They are going to be used as a guide to the day. Hopefully they come up. Maybe not. So did you get the levels, Diane, there for today? Just before I repeat them. All right, our pivot was 89. Yeah, is it 89.74? Right. I'll give you the levels again. The pivot was 81. Then we had resistance up at 89, 97, 48.06, 15, and 24, and support on the downside at 74, 67, 58, 50, and 41. Now, I don't know if we're going to move or not. Yesterday, we had to add more levels, and today it's a little bit different, so you just never know. But we are definitely range bound here. We have been for the last week or so, kind of consolidating here, seeing where our next move is going to come from. Today, we're just kind of very, very slow as we're just hanging around our pivot area here, just kind of going nowhere fast. At least we got a couple good opportunities, so I can't complain. And they both worked out very nicely for us, so we can't complain. Even though we did get up to 88 and a quarter, obviously we talk about scaling in to a level. That's what we're trying to do here. We're trying to scale into a situation, into an opportunity. All right, we are just basically just range bound here a little bit. Really could go either way from here. You just never know which way it's going to go. So downside support is 74 already works, so I would not be, definitely a lot riskier to try to take it if it goes back down there. Really, I'd look at the 67 if you're more risk averse. When do you make the trade against the resistance? Well, we had it. Again, we scale into a level. So we have the orders. Basically, my orders are already in place prior to the market getting up to a resistance area or not. And your scale is all dependent on how much risk your risk tolerances are, and everybody has different risk tolerance. And if you're just trading one lots, that's okay. You have to just find the area that you think would be a good entry point for you. If you're looking at the level straight up, then you're taking 89. We obviously didn't get up to 89. We got up to 88 and a quarter and then rotated off. My scale comes in at 88 and 88, 89, 90. That's how I scale into my area of resistance and or support. Like we talked about on the downside, we got down to 75 initially and then bounced off of it and then rotated back down and got my lower end of the ranges there. I got the 73 on the second rotation down. Now, some people will keep that second rotation up to a level. Some people will take it off. It all depends on your risk tolerance and how much risk you want to take. So my orders are already in place against support and resistance areas prior to the market getting there. Otherwise, it's kind of, if you wait for a decision in your head to be made, whether you should do it or not, usually you're going to miss the opportunity. So we had that, my orders were already in place prior to it getting there. And right now my orders on the downside would be down at the 67 area. And additionally, not only my orders are there, but my stops would be in place in case it gets triggered. All right, we are just very, very slow today, which is, like I said, that's okay. Not always going to be busy. We have to take our opportunities when they present themselves, and we have to be patient and wait for those opportunities to get triggered, and then trade the trade when it happens. Right? I mean, that's all we're trying to do here. And sometimes we're going to get a lot more opportunities, and sometimes not so much. So. But I would say on average, we definitely average about 4 or 5 trades during the course of a day. Well, they're used to, sometimes we look at the bond market to try to give us some opportunity, maybe in the equity market and vice versa. Lately, not so much so. But the other reason is that I used to trade in the bond pit, so I have a little place in my heart to have the bond market up there. But unfortunately, it used to trade really well. We used to trade the bond market really well. But ever since the Fed decided to do all its bond buying and quantitative easing and injecting its hands into the bond market is doesn't trade well technically like it used to. So we just have it up there just for prosperity's sake to see. And then sometimes we do get some inclination from the bond market as to what's going to happen in the equity market. Sometimes it's inverse trade. Sometimes we might have to go with it. It all depends on the situation and any particular day. Not every day. It doesn't always trade the same. You can't just say we're inverse trading one day and then keep it that way. Sometimes we have to go with it, depending on the situation. But like I said, it's more of a situation where keep the market up there to kind of give us a guideline as to where bonds might be doing, and sometimes we get a good fit into what equities are going to be doing as well off of the bond market. All right, they have definitely pulled a plug here. And again, we don't like to trade just for trading's sake. We'd rather wait for a good opportunity. And at least we had that on our resistance area on the upside, and as well as our support level on the downside. And now we're just kind of pivoting back and forth, going nowhere fast. So I would venture to say that we have to be very patient here and wait. We're definitely going to have opportunities to trade because the markets are going to be moving. And if that's not going to be today, might be tomorrow or the next day. We do have unemployment coming out on Friday. That should give us some movement. Yeah, that's true. The FOMC minutes are going to also be released. Thanks for reminding me that they're going to be released at 1 o'clock Chicago time. They could be waiting for that as well. You're right. Definitely nothing much right now, but I would venture to say also that if you're going, I would not be kind of just trading FOMC anything. I don't like F days, Fed days. It's my own personal thing. Some people love to trade it. They like the volatility, like the movement. It's not my cup of tea. So I try to stay away from any Fed day releases, whether they're going to be releasing interest rates or whatever. This is their minutes from their the meeting. And I would, well, for me anyway, I would be happily watching it or staying away from it, just because I've traded many FOMC results, and I don't seem to do too well with them. Even when I was trading on the floor, I always waited till 1 o'clock, and I just never, I don't know why I always waited till 1 o'clock. It's kind of silly, but I did, and then I learned: don't wait till 1 o'clock. Just forget it. So I'm sharing my issues with FOMC with you. Doesn't mean that you have to. You have to. You could trade it and love it. But that's what we like to do here. So yeah, maybe they are waiting for FOMC later. That could be another reason, or maybe they're just waiting for tomorrow, or maybe they're waiting for unemployment, or maybe they're just consolidating. Maybe they're not going anywhere fast. Volume is down today, so it is what it is. It's always tomorrow. It's also very hard for me to keep talking when there's nothing going on. I'd rather be talking about the markets trading, but there's nothing happening. But it's okay. Like I said, it's always tomorrow. All right, definitely. How long have I been a trader? Oh, 30 years. 30 years. 30 years plus. Yeah, 30 years plus. Hard number to say. 30 years plus. Wow. Time does fly by, I'll tell you that much. I have to say that the trading on the floor was definitely unique and definitely different than trading on the screen here. It was definitely fun. All right. Well, again, we gave you some parameters to look at. We are giving you the levels and also telling you that there's going to be the FOMC going to have released their minutes from their meeting at 1 o'clock Chicago time. And I don't know if much is going to happen until then. You never know what could happen, though. You always got to stay focused and be ready for any challenge. But at this point right now, with the market kind of just trading sideways here, I'd be very careful. The next support level we have on the downside would be down at the 67 area if we rotate it back down there. Upside resistance, the next good resistance would be, I know that we kind of tested the 89, I got up to 88 and a quarter there. So probably, I mean, if you're going to do anything, take the upper end of that range if you're going to trade it at all on the upside. But whatever the case may be, just make sure you have your stops in place and look for opportunities and be patient and wait for them. I know sometimes like I said, we get more opportunities than others. Today, obviously, they definitely sucked out a lot of volatility and a lot of movement in the market. So, which is fine. Like I said, there's always going to be a tomorrow. FOMC is going to be the minutes from their meeting is going to be released at 1 o'clock Chicago time, so that could give a little bit of movement. And if you are, so inclined and your risk tolerance is such that you want to trade, then knock your socks off. I'm never going to tell you not to trade. I mean, a lot of traders I've been around. Everybody likes different kind of markets. And so if that's a market that you like to trade, then go ahead. Just make sure you keep your stops in place. Understand the volatility is going to be different too. So you have to take that into account as well. And if you see there are the levels that are in the chat box for us. Thanks, Mark. I appreciate you putting it up. And just be patient and see what happens. So get back here in a little bit, and hopefully it moves around a bit. I don't know, but you never know. We'll see what happens. Like I said, there's always tomorrow, and we'll go from there. All right, get back here in a bit.
A couple of quick programming notes. Want to thank those who are coming in today as a guest into this Trade Along live session with Saul. We do this session on a daily basis. It's a subscription service. It's focused on trading and scalping the S&P 500 E-mini, particularly during the morning session between the hours of 9:30 and 11:30 Eastern Time on a daily basis. If you need trading software, you need any help at all, ask. We have a full trading academy that's available to you. Saul is the teacher and host of the academy. He's also the host of this daily Trade Along with Saul live in Zoom. This is a webinar format. Again, we have guests coming in. Welcome guests. I just sent out an opportunity for two things. Coming into the service, we asked you to spend some time and review our website, tradealongtradingacademy.com, tradealongtradingacademy.com. I posted it into the chat area for your convenience. So go to your chat area, you'll see it. You'll also see an opportunity, which I found today, available is a discount on Saul services. This service, this Trade Along live session. So check out the discount. Take the offer seriously. It is an exploding offer or a disappearing offer. It's available again today based on finding it here. And it could disappear tonight, not be available for tomorrow. It just depends on what Saul is up to. Right now, it's 11:56 a.m. on January 5th, 2022. Everything we do is for educational purposes only. Nothing to be taken as direct trading or investment advice. In this session, any session, all sessions, all education, it's all detailed based on your agreement coming into the service. So thank you. If you like what we're doing here, tell your friends. It's tradealonglive.com is the entry into the webinar as a guest. So take a moment and think about that for a second. There's two websites. One is tradealonglive.com, which is this webinar and the registration for Zoom to get into this webinar. And then we have tradealongtradingacademy.com is where we have individuals come in and sign up for Saul's trading education. Trading education comes with access as a bonus to this Trade Along live session. In other words, you pay for the education, you get this as a free bonus. We do have subscribers that just subscribe to the Trade Along live session this session, so that's the discount that I just sent out to you. So take advantage of it. And again, if you're coming in or you want somebody to come in and you'd like to join us live in this Trade Along live session on a daily basis, go to the link, tradealonglive.com, tradealonglive.com.